righty. Gary, thing number one, CPI breaks 3%, leading people to believe rate cuts are coming sooner rather than later. We've been talking about. Thing number one is CPI softens, rate cuts, quote, sooner rather than later.
Well, Rob, the people who favor the Federal Reserve having lower rates are referred to as doves. The people who want higher rates are referred to as hawks. And this CPI report had the doves very, very excited. People were looking for a repeat of last month's 3.0, 3%. And instead, we got 2.9%. And, 0.1% really doesn't matter. It shouldn't matter. But people tend to get excited around those zeros. Same reason that corporations will price something at $9.99, right? It's not really different than $10. It's just a psychological thing. Seeing the CPI crack 3% on the downside got the doves really excited. The 0.2% monthly increase, it's not great. It's not bad. Certainly well within reason. The core CPI number that excludes food and energy, that was up 3.2% versus last year, also up 0.2% versus last month. These numbers are still a little bit high, but all in, there's no question we're looking at improvement here. And the word that everybody uses for this is disinflation. And what that means is we still have inflation, but the rate of inflation is coming down. So what that means is you're going to continue to see higher prices, but the rate of increase on those prices will be lower. For all you calculus fans out there, that's the second derivative.
I actually saw a great tweet this weekend or last Friday, I think it was, and said someone explained to me this disinflation thing. And the guy's response was 5 years ago, I gained 5 pounds.
Yeah.
A year later, I gained 10. A year later, I gained 15. A year later, I gained 20. Last year, I lost 3 pounds. So moving in the right direction. But Gary, we've been seeing a lot of headlines saying Fed's beat inflation. They've won the war. Now they should cut rates. Do you think they've beaten inflation, Gary?
Rob, I saw those headlines too. And I think the headlines are premature and silly and inaccurate. Um, First of all, I'm on record as saying the appropriate rate of inflation, the rate they should be aiming for is zero. The
Mhm.
Fed's mandate is stable prices, and stable prices encourage people to save and invest and build a better future. Higher inflation encourages people to consume. There's no point in investing. You just need to buy something before prices go up. So the Fed's 2% target is 2% too high and a CPI of 3%. And I do think the CPI is understated. It's something we've discussed at length on this channel. But even if you think it is 3%, and I don't, that's not 2%. So I think the number's 3% too high, but it's 50% above the Fed's target. Now, are things getting better? They definitely are getting better. But I think it's premature to declare victory on this. The other thing is, people are saying the Fed beat inflation, Powell should lower rates. The real issue right now is everybody's looking for the Fed to save us from both inflation and a recession. And the truth is, Powell and the Fed, they don't have control over this. The real issue right now is massive amounts of congressional overspending are what's creating the problem. That's what's driving inflation. The Fed is in a position right now where whether they raise rates or lower rates, we're going to end up with inflation. That's coming out of Washington. That's coming out of Congress, rather. So, look, I think the market is right in that we're going to see a September rate cut. A lot of people are saying 50 basis points. I don't think that's likely. I think, we're going to see a 25 basis point rate cut in September. I don't think that's the right decision, but it doesn't really matter whether I think that's good policy or bad policy. Our job is to figure out what's going to happen and then how do we make money from it.
On the record, DKI has shifted its position from higher for longer to rate cuts sooner rather than later.
Yeah.
Gary expecting a 25 basis point cut in September.
You know what, Rob? I reserve the right to change my point of
That's
view
exactly right.
when we get new data.
You would
I
be a fool. You would be a fool otherwise.
Right. I'm not locked into one position forever. When we get new data, when conditions change, we can change our opinions. And by the way, everyone listening to this, you should change your opinion. There are times you should be long, there are times you should be short, there are times you should be hawkish, times you should be dovish. This sounds like a folk song. Anyway,
Yeah. Yeah, it really
I've
does.
I've
I
written
think
the
we're onto
world's
something.
worst finance folk song.
There we go. That could
Yeah.
be a hit. That's what we need to take us to the next level, I think.
Yeah.